you have only one tool. It's called QE, printing money. And if it happens one more time, it is the end. It is the end. It's the end of the dollar. It's hyperinflation. It's nasty, nasty stuff that you just don't want to wish for. I think it's going to happen. I really do. Already you're seeing sort of this shadow QE happening. There's going to be a panic. And I think it'll be creating a dollar crisis, complete dumping of US dollars. What scares me the most is that if we get a very severe recession, with the amount of global debt that's out there at historical levels, what is $315 trillion worth of debt, you're going to see a spiral that's going to be impossible to turn around. And you're going to see depression / hyperinflation, and that always leads to war. The global order is dead as a dodo. It does not exist anymore. The rules that govern the global chess game have been completely thrown out the window. This reminds me a bit of what the world looked like just before World War I, with all these shifting alliances and a lot of nationalism. It's going to be chaotic, messy, and unpredictable.
Frank, because you were so correct calling things 5 years ago, where do you see things 5 years from now?
This is The Real Story with Michelle Makori.
Hello, I'm Michelle Makori. Thank you for joining us. You're watching The Real Story, where we go beyond the headlines, beneath the surface, and behind the curtain to show you what is really happening with money, markets, and power. And my guest today was one of the very first to warn that the global monetary system was splitting. Frank Giustra said years ago that the pillars of the dollar-based world were cracking. And now he says that fracture is accelerating and that we are effectively headed for a monetary war between China and the United States. In his view, the outcome will eventually force the world into a new Bretton Woods-style agreement, but only after a period of chaos, instability, and geopolitical shock. Now, Frank Giustra is well known to many in the gold and mining world. He is one of Canada's most successful entrepreneurs. He is a billionaire media and mining mogul. He built Lionsgate into a global studio. He helped finance and launch some of the most significant mining companies of the last 3 decades. He's currently the CEO of the Fiore Group and co-chair of the International Crisis Group. And he has had his finger on the pulse of major economic shifts. So today we're going to ask him where we are in the monetary system reset, his outlook on the US economy, what Americans should realistically prepare for, and how he sees this transition ultimately reshaping markets and global power. Frank, thank you so much for joining us.
That's a long list. Nice to be with you.
Well, we're going to give you a big macro overview of everything because, as I said, you've been spot on with a lot of your calls. You were calling these shifts, the bifurcation of the global monetary system, really long before they appeared on most people's radar. I would say you and Andy Schechtman were certainly the first two that sort of connected the dots here. You were very early to the trend of de-dollarization after the excessive weaponization of the dollar with the Biden administration's sanctions placed on Russia. And by the way, in fact, we just had Russia's finance minister announcing that trade between Russia and China now takes place almost entirely outside Western currencies. So a development there, something that you would warned would happen. And you said that central banks would turn back to gold as a neutral reserve. And we've seen that happen for the first time in modern history. Central banks hold more gold collectively than they do US treasuries. You said China would develop a gold-linked blockchain settlement system to allay the lack of trust, therefore bringing gold into that. We're seeing that happening. It now has a framework that ties digital currency, cross-border settlement, and physical gold infrastructure together, and it's also expanding the Shanghai Gold Exchange. So basically, Frank, all of these things that you, through our various conversations, said would happen are happening. And that's why I thought it was important that you give your big picture macro view here. And when you look at the landscape today, do you have more or less conviction that we will have a reset, that gold will be underpinning it? And what convinces you that this fracture in the monetary system is now undeniable?
Well, I would say even more conviction than I'd had 5 or 6 years ago when I first came up with this thesis. And I'll just give you a quick recap of what I saw at the time, which now has been validated in my opinion. So at the time I saw that there was always a concern that there was the TINA crowd, there is no alternative to the US dollar. And their main take on it was that what would countries do with unwanted yuans with trade deficits and trade surpluses? And because of the lack of stability and financial stability in China, the lack of financial instruments, the lack of liquidity, etc. And I said at the time, because I had been watching for maybe 10 years at that point, how much gold China was accumulating from the West. Not all reported. A lot of, in my opinion, many others' opinions, held it unofficially in various accounts. Even Goldman Sachs has come out and said they think that China has probably 10 times more gold than they officially have reported. So my thesis was that if you have two countries, China and say Saudi Arabia, and at the end of a period of time, Saudi Arabia ends up with a bunch of unwanted yuans that it has no use for because it has a trade surplus with China, that they would be able to exchange those yuans for gold. Now, my theory has been validated in that recently governments and institutions are able to exchange your yuans for physical gold on the Shanghai Gold Exchange. 2, China set up vaults in Hong Kong to hold physical gold, and they're planning on setting up similar vaults in other parts throughout Asia and the Middle East. And 3, and this is the part that's really interesting, China is now offering countries around the world, what they refer to as friendly countries, friendly to China that is, the ability to store their gold in China, much the same as in the past, New York and London served that purpose for many countries around the world. So they've completely flipped the script on the West on that point. So I am now convinced that using Enbridge and China's digital superhighway, which is what their clearing system will be like using central bank digital currencies, will be married with gold to allow China to compete with the US dollar. And already a third of the world's trade is done in yuans. So they're moving very, very quickly. And I think that gold, as a result, is going to play a central role in whatever that system looks like down the road.
To your point, Frank, Cambodia has actually just announced plans to store its gold in China in a vault registered with the Shanghai Gold Exchange in the Shenzhen bonded zone. Just like you said, China is offering custody and settlement infrastructure to friendly foreign nations in a way that directly competes with London and New York. So just further validation of your point and observation there, Frank. So what is the end game here? And is it now China versus the US? Because originally there was conversation of like a BRICS common currency, a collection of perhaps a basket of commodities, gold being part of that, underpinning a BRICS common currency. There were challenges with that, considering that not all of those nations were on the same page and everything. Are you getting the sense that China is now mostly going its own route, taking the lead, if
Absolutely.
nothing else?
I think if we ever get a BRICS currency, it's way down the road. I think this mechanism that they've developed is much easier. China can control it. And it's very clear to me that that's the route they're taking. And all these other conversations about basket of currency and commodities backing a BRICS currency, that's going to take years and years to develop, if ever. So I think they found a more simple method, and that's using gold.
And this now effectively, you say, positions China to take on the US. Is that the battle line that's been drawn here?
Oh, absolutely. You've got, this is going to be a global battle for currency supremacy. And it's basically China versus the US. And what China, what motivated China was the fear of sanctions, the fear of, when the US and the West sanctioned Russia over the invasion of Ukraine and seized their $300 billion of reserves, that sent a very clear message to not just China, but I think to the rest of the world. And that's why you're seeing this de-dollarization movement and replacing it with gold, because gold is neutral. It's no, they can't seize somebody's gold. And so I think that now China is going to continue to create this infrastructure to allow it to do its trade with the rest of the world in non-dollar terms. And you also saw it recently with their insistence that BHP pay that they pay BHP in yuans for their iron ore. It sent a very clear message to the world that they now want to move away from dollar pricing of commodities.
Yeah, to your point, we did in fact see that, and we are seeing countries trade in their own currencies. Just a report, as I mentioned off the top, that the Russian finance minister said that over 90% now of the trade between Russia and China takes place outside Western currencies. Finance Minister Silunov says 99.1% of all the settlements between the two nations now conducted in rubles and yuan. And, you know, the argument has always been, Frank, they don't really trust each other. Nobody really trusts China. Nobody really trusts Russia. Hence, you had the Tina argument, there is no alternative. So help us understand how gold kind of creates that trust layer where you negate the fear of don't really want to do business with China, don't really want to do business with Russia.
But it's not that they don't want to do business, it's whether you trust the currency of the other country. And I think that the gold component of this conversation solves that problem. Gold is a neutral asset. It's nobody else's liability. It's, you know, you hold it, you own it, it's yours. As long as it's physical, it's yours. And that really helps to mitigate the lack of trust. I mean, obviously, and then there's the question is, who do you trust less in today's world with the aggressive policies, tariff threats, sanction threats that the U.S. is using against the world? I think the U.S. is not serving its own interests in this regard. And so if you're India, for instance, are you going to trust America 100%? You know, they've been threatened with 100% tariffs for buying Russian oil. So everybody's under threat right now. So it's a question: who do you trust more or trust less? So I think, but I think gold, if it's structured properly, and you have these gold vaults around the world to be able to settle deficits, I think it solves a big part of the problem.
So, Frank, you've said that this will ultimately boil down to a war between China and the U.S. We have a trade war. We have this monetary war. I mean, do you see the United States just acquiescing and letting this happen? How do you see this playing out as this conflict continues?
Yeah, I don't see that. And you just have to study a little bit of history to understand that this sort of thing happens every 70 or 100 years when a declining power is being challenged by a rising power. And this is the scenario we've got with the U.S. and China today. And I don't think the U.S. is going to back down. I think the U.S. is very concerned about losing its reserve status. I've always said that America's reserve status is almost as important as its military. And if it loses one, it's going to resort to the other to get its way. So, you know, the chances of conflict eventually are, you know, I think pretty high. And, you know, this is obviously the thing that scares us all the most is the China-U.S. conflict. And so I think, you know, you've got two 800-pound gorillas going at each other, and I don't think the U.S. will back down, and I don't think China will back down. So I think at some point it'll be resolved, and eventually we'll get a new, let's call it a new Bretton Woods global system. That usually doesn't happen without some form of conflict, sadly.
Right, and just, you know, for context, for our viewers, you know, Bretton Woods was the system that came after World War II. So when we talk about a new monetary framework and say Bretton Woods, I mean, that was established in 1944 near the end of World War II. The U.S. had helped win the war, emerged as the only major economy with its industrial base intact. They all gathered, the Allied nations gathered in Bretton Woods in New Hampshire, and they designed a new structure for global money. At the time, the U.S. held most of the world's gold reserves, and that gave the dollar unmatched credibility. Under the agreement, the currencies were essentially pegged to the dollar, and the dollar was pegged to gold, and foreign governments could then redeem their dollars for gold at a fixed rate. That convertibility was the anchor of the entire system. And as we know, that system eventually cracked when the U.S. created more dollars than gold, and France sent a warship to collect its gold. And that pressure forced President Nixon to suspend dollar convertibility, which effectively ended the Bretton Woods arrangement. I like to give a little bit of a history recap. Frank, I read the viewer comments. I read the viewer comments, and we take for granted that everybody is as much of a history nerd as we are or understands all the terms. So I like to break things down and help our viewers, and as we expand our viewer pool, understand some of the history here. But the point I was making with the Bretton Woods arrangement is that that came after an ugly and brutal World War II, right? So what would force the world back into a room to negotiate a new framework now?
Like I said, I don't think it's going to happen voluntarily. I think there has to be some event that pushes the major players to come to some sort of an agreement. It could be a U.S. dollar crisis that might force the U.S. to rethink how they back the U.S. dollar and how do they revalue the U.S. dollar against gold, much like they did in 1933, where they basically took the gold price up. At that point, they controlled most of the gold in the world, so they were able to move the price up by almost 70%. In other words, devalue the U.S. dollar by 70%. So it might be something like that that's forced upon them by a major recession, depression, or some other financial crisis. But usually throughout history, it's these things are settled through conflict. And what worries me, and as you know, I'm the chair of the International Crisis Group, and it's our job. We're a non-governmental organization that tries to prevent wars. And what concerns me is that the global order is dead as a dodo. It does not exist anymore. And the rules that govern the chess game, the global chess game, have been completely thrown out the window. And you've got the rules. You got kings cozying up to kings. You got rooks and bishops teaming up to try and be a counterforce to the major powers. And you've got Europe, a queen turning into a pawn. And this reminds me a bit of what the world looked like just before World War One, with all these shifting alliances and a lot of nationalism. So I'm a bit worried. I don't know. I hope that we're all smart enough to avoid a direct conflict between China and the United States, because we live in a nuclear world. China is just as sophisticated with their military technology as the U.S. Do not underestimate China's technical abilities. They've got hypersonic missiles, they've got aircraft carriers, they've got everything going on. And so that would be an ugly scenario. So that's what worries me the most.
All right, so that is, the doomsday scenario, the actual kinetic war scenario. I know you've given this a lot of thought. Are there other realistic scenarios that set up this Bretton Woods agreement, a new monetary framework? And I'll point out that it's something that the Treasury Secretary of the United States, Scott Bessent, has said that he sees happening, and that he has welcomed participating in the next Bretton Woods. And I believe we have that soundbite now.
I also felt very strongly that we're in the midst of a great realignment, and of a Bretton Woods realignments coming in terms of global policy, global trade. There's a lot of what I taught at Yale. I've been studying my whole life. I'd like to be part of it, either on the inside or the out.
So when you hear the Treasury Secretary saying that, Frank, how does that sort of inform the other scenarios that you see potentially leading to the next Bretton Woods?
Well, I'm happy to hear it. I just see, but the thing, the reality is that I'm starting to witness what is a non-kinetic proxy war. And if you saw it with the bailout of Argentina, and they made it very clear that the reason they were bailing out Argentina was because they didn't want Argentina to fall into China's arms, because China's made a lot of investments in Argentina. So there's a lot of ways this can play out. I mean, I would think if the world were a rational place, that the U.S. must be able to see that they're heading towards a fiscal and monetary cliff. I mean, that is so obvious to everybody. that they would find a way to cooperate with the rest of the world to find a new system and accept that the dollar has to lose a lot of value and a lot of power in that process. And I think that's the part that most Americans can't accept, is the loss of power that the dollar gives them. And it gives them a lot of power. And a lot of people have profited greatly over the decades because of the U.S. reserve currency status. So I don't know. I just don't. I see action speaking louder than words, and I'm just watching what's happening, and I would hope that there would be a negotiable way through this for the entire planet, but it sure doesn't look that way at the moment.
So, Frank, because you were so correct calling things 5 years ago, where do you see things 5 years from now?
I think it's going to be chaotic, messy, and unpredictable. And I don't know if it can be resolved in 5 years. I really don't. So I think you're going to see a combination of ways that the U.S. and China and BRICS and the West will compete with each other in global trade. And I just don't see a resolution. I just see a lot of chaos until there's a major event. And I hope that's not war, but it could be something else. A major event that forces everybody's hand to come to the table. So I just see a lot of kind of uncertainty, a lot of chaos.
Do you see a scenario where the Trump administration is understanding that this is where things are and wants to, weaken the dollar intentionally to onshore manufacturing, to make the United States more sovereign, and is putting those chess pieces into place that it may, for example, link the dollar to gold itself, that if you can't beat them, join them, or beat them to the punch rather, and come out with this idea of a gold-linked treasury. And then conversely, also make strides asserting dominance through stable coins, and we can talk about that, but give me your thoughts on the gold side.
Yeah, no, first of all, I think the U.S. has a bit of a conundrum happening with those goals. One is to devalue the dollar versus other currencies to obviously help exports and the bringing back of manufacturing to the U.S. But at the same time, they don't want to lose the reserve status. And they've gone as far as threatening countries that are even thinking about deliberately moving away from the U.S. dollar with tariffs. So, and it leads to these silly statements like Besson made recently, that when he said it's not the U.S. dollar going down, it's other currencies going up. I mean, I don't know what that meant, but it felt like a Jedi mind trick. But I think they've come up with a brilliant plan, and this is the whole stablecoin system. And the Genius Act, which was just passed, to me was an ingenious way to create demand for U.S. treasuries, because if you're using stable coins and financial transactions and payment systems and other financial products, it requires the backing of U.S. treasuries, the most liquid, obviously, tier one asset in the world. And so by making stable coins prolific, not just in the U.S., but trying to convince other countries to create stable coin systems, it basically creates demand for U.S. treasuries when in the current situation, the demand from foreign buyers is falling away through this whole de-dollarization thing that's been going on. And I think it's brilliant, much in the same way as when Nixon went off the gold standard in 1971, a couple of years later, they created the petrodollar, and where oil had to be priced in US dollars. And that created, what is almost 50 years of demand for US dollars. Now, the petrodollar efficacy is falling away as well. 20% of today's oil is traded in non-US dollar terms. So that is probably coming to an end. And I think if they can make the stable coin scheme, this new gimmick, work, I think it's brilliant.
Just to explain again to our viewers that are not that savvy or not that up to speed with what's going on with the Genius Act, it, at its most basic level, regulates stable coins, which are effectively digital tokens designed to hold a steady value, usually pegged 1-to-1 to the US dollar. So you make transactions without the wild price swings of other cryptocurrencies. And they're the middle layer of the bridge that lets people move in and out of different digital assets without leaving the crypto ecosystem. Just as an explainer there. And for years, they operated in a legal gray zone, but the Genius Act came in and created the first nationwide framework for payment stablecoins, and only approved issuers can create payment stablecoins. Every coin has to be backed 1-to-1 with high-quality liquid assets like cash or short-term U.S. treasuries. So that in itself, brings the United States government into this. From now on, the issuers are treated like financial institutions. They have strict oversight, anti-money laundering checks, full compliance. So it regulates this, stable coin, which, as I said, is what's needed to transact in the crypto system. But even as it stands, currently, I believe it's a $260 billion market. It would need to become a much, much bigger market for this to actually have more of an impact, especially when we're looking at $38 trillion in debt.
Yeah, of course, and that's why they need to take it internationally. I mean, there's only the U.S. only has $5 trillion of a savings pool. That's not going to be enough, even if all of it went into it. So I think that it feels to me like they want to make the stable coin thing so prolific that it's adopted internationally. That's the only way out.
Meaning, what do you mean by adopted internationally?
Meaning that international institutions and corporations use stablecoin systems for their transactions.
And that all stable coins are pegged to the US dollar, because currently you can have a stable coin pegged to another fiat currency.
You could, but you have to ask yourself which is the most liquid currency in the world. And obviously, if you look at, I think Tether has, which is also has about an 80% backing with U.S. Treasuries. Okay, it also has gold, but I think that it certainly would create more demand for U.S. dollars.
I mean, yeah, that is the idea. Obviously, the question is,
and especially in international trade and transactions.
The question is whether that's enough to counter the bigger de-dollarization trend with the stable coins and the market that exists for it now.
My personal opinion, I don't think it is, but it's certainly a brilliant move in the right direction. I think that here the problem with the U.S. is this. Okay, that deficit is growing by that debt is growing by $2 trillion a year. Okay, I think the CBO recently came out and said by 2055, that debt's going to be $150 trillion. That's an insane. We'll never get there. I think things are going to implode before we ever get to 2055. But you can see the trend. I mean, America has a spending problem, and it can't be addressed by revenues from tariffs. Whatever. It's the lack of will in Congress to cut any costs meaningfully in any meaningful way. And you saw, how Elon Musk failed through the Doge approach. He gave up. He just came to the realization the will is not there. The political system is too broken and too corrupt. So I don't think that in itself is going to be the solution. I think at the end of the day, you're going to need a real devaluation of the dollar to the point where it hurts. And it hurts because not only because the loss of reserve status, but it hurts in terms of standard of living. It hurts in terms of interest rates, in terms of inflation in the U.S. So it's going to be a painful transition. I don't see an easy way out. There's no free lunch. They created this mess, and the mess is just getting bigger and bigger by the day, and there's no stopping. So at some point, you got to pay the piper.
And we have discussed on this show, as well as with you several times, that it's not just the international de-dollarization trend, it's the U.S. having its own fiscal dominance and structural issues with that $38 trillion in debt, and just servicing that debt is more than the annual defense spending budget. So the problems are there, the cracks are there. My question, though, is what does this in-between stage look like? What does that mean for Americans? if we don't know what the ultimate transition, and I don't know that you do have an idea of what could be agreed to in this new Bretton Woods, what would the intermediate phase be, and what do you think would ultimately be the new agreement? And I understand that's asking you to put on a lot of prognostication and your prophecy hat on. But again, you've had some correct calls, so I'm curious what you think could happen.
Is it the ultimate solution?
Yeah, what would be sure? What would be the Bretton Woods? I
think gold back currencies to bring discipline back into the fiscal, systems of Western countries, which are loaded up with debt, have been printing money. Now that's got to come to an end, and so a gold-backed currency in some form. What I described earlier was not a gold-backed currency. That is gold being used as a settlement currency to get rid of unwanted currency. But if in a truly gold-backed system, you would have to have a much higher gold price. Okay, today's gold price would not be able to sustain the money supply that's out there. So collectively, the world would have to come together and agree. Now that the entire world has been accumulating gold, it's not just the U.S., it's every country on the planet. And maybe it represents in many countries, say in Europe, 4% of GDP. That's certainly the goal of most European countries. I don't know what the number is, but it has to be some equilibrium in gold ownership, which is relative to either the money supply or GDP, and it has to be at a much higher price. And then that would bring back discipline to governments. Again, I don't see it happening without it being forced down their throat, because no government wants to give up power. No politician wants to give up power. And if you have a gold-backed system, you're giving up power. And that's always been one of the criticisms.
Right. Nobody wants that kind of discipline, hence we got off the gold standard in the first place. But when you say gold-backed, what does that mean in your mind, gold-backed?
Well, that means, if you look at pre-World War II, countries like Britain and the United States had anywhere between 20 and 40% gold backing of their money supply, of their M1 money supply. And so that gives enough confidence. So you have to maintain, you can't spend more than you've got backing. You can't print money. It puts a lot of constraints on. And, I'm not sure that that's the way that it would work in the future, but that's certainly the way it's worked in the past.
So when you look, Frank, at, the recent run-up that we've had with gold pushing 4,400 recently, when you're seeing that the debasement trade, that Wall Street's biggest banks are effectively saying buy gold, when Morgan Stanley is saying put 20% of your portfolio in gold, JP Morgan telling its clients to do the same. What does that signal to you in terms of where we are in this potential reset timeline?
It's the last warning. And I'm actually surprised that Wall Street banks have come out and they've never recommended gold. I mean, they're so anti-gold and always have been, because it's really a judgment against the US dollar. If you like gold, you're basically saying that you're worried about the US dollar. So they've never, ever. And so this was kind of a pleasant surprise for anybody that owns gold. But I think it's a final warning, because, and again, you look at gold, which is $4,000 today. That might seem high, right? But you have to understand, if you go through history, and I'll give you two examples. If we were sitting here in 1971, and I said to you, gold is going to go up 28-fold in the next 10 years, you wouldn't have believed me. You wouldn't have, but it did in 10 years. Or say we were sitting here in 2001, and I said in the next 10 years, gold's going to go up 8-fold. Would you have believed me? No, you wouldn't have. So here we are sitting today in another crisis moment where things are really shifting, where it's a pivotal moment in history. And if someone were to say, well, gold's going to be at this price, and you might think that's outrageous, it's not. Because gold is going to be the anchor of stability in the global system. It'll be the monetary anchor to provide stability. And that means that if enough countries come together that own enough gold to be the majority of gold owners, they can set the price. It happened in 1974 when Europe, after the gold window was shut, a number of European countries were very upset about that because basically they felt betrayed by the U.S. And all of a sudden they were left with a fiat currency. And so there were a number of conversations about European countries coming together because collectively they had as much or more gold than the U.S. and that they could reset the price to create more reserves. The U.S. got wind of that, and they made some very serious threats. Kissinger basically, threatened Germany. At that time, Germany was being protected by the U.S. against the Soviet Empire, and with military bases all over Europe, they were able to say, "We're going to crush you if you try that," and it didn't happen. But I think in today's world, if we really want a solution, everybody's got to come to enough. Countries have to come together that own enough gold to reset the price.
Right, but as you say, because the United States has so much at stake there, it's not like it's going to go along with us willingly, or unless, as we've had some people suggest, the United States has been secretly buying gold itself and has more gold than we are told and could beat them to the punch.
And that's an interesting point. I don't know if you recall, at the beginning of this year, in January, started in December, but January, February, March, April, there was an incredible amount of gold that came into the U.S., physical gold from London. That was explained the way that, they were trying to get ahead of the tariffs so that they wouldn't be taxed on the gold imports. I don't know if I bought that. I didn't get it. I didn't know whether it was major banks in anticipation of what was going to happen or what it was promoted by the U.S. government. But the thing that really puzzles me is there was all this talk about auditing Fort Knox. Trump was for it, Elon Musk was for it, it was all over the news, dead quiet. It's crickets. No one talks about it. Why won't the U.S. allow the audit of Fort Knox? One of two reasons. The gold is not there, or some of it's not there. It's been pledged away somehow, or maybe they're waiting to buy more gold. I don't know the answer, but something is fishy. And, because otherwise it's so easy to audit Fort Knox. They haven't audited Fort Knox since 1955, when Eisenhower was president.
Well, Judy Shelton is saying that this is going to happen. And we've had some interesting developments on that front. For example, there were conversations that this could happen. We had Senator Mike Lee. He's advancing a related initiative with the Gold Reserve Transparency Act, legislation that would mandate a comprehensive audit of America's gold reserves, including those held at Fort Knox. So there is movement there. As we know, Judy Shelton, a former Trump advisor, leading advocate for sound money, she's proposed issuing 50-year Treasury bonds, as we discussed. And so you need to audit the gold in the first place. But this is starting to get some conversation, some traction, Frank. We had Larry Kudlow discuss this recently. He was on the Trump administration's first team as an economic advisor. He had Senator Mike Lee on the show. They said they're going to audit the gold. They brought up this idea of Judy Shelton's gold-backed treasuries. And Kudlow said that the president likes it. Kudlow, who I assume was speaking with relatively recent insight, said that the president likes this idea.
I think that's great. If that's the case, go for it. Do it. Because I think that would really put a lot of people's minds at ease. And that gold should be used in some fashion. But again, not at these prices. I mean, Judy Shelton's concept of a 50-year gold-backed note is okay, but with only $1 trillion worth of gold in the vaults, that doesn't solve the problem. Not at today's prices. It shows that, America's serious about creating stability behind its currency, but it doesn't solve the problem. I don't know what price it would take to solve the problem, but it certainly isn't $4,000 an ounce. So I'm not sure exactly what that would achieve unless they issued that initially and then acquired more and more gold like many other countries are doing. Maybe they're doing that already. I don't know. But it would be nice to find out.
Or, there have been, as we say, calls to revalue the gold. And this is a recurring theme on this show because it does tend to gain more momentum. The Fed came out with a research note earlier this year looking at how other countries have revalued their gold. Donald Trump Jr. has an ad out in his capacity as a spokesperson for a gold company saying that his father is looking to revalue the gold. He points out the Gold Reserve Act and saying that this is something that his father's administration is actually looking to do, and that it would, solve a lot of problems. We're playing that ad right there where Donald Trump Jr. breaks it down.
I see it.
So, saying it would immediately strengthen America's financial position and signal gold's renewed importance in the monetary system. So, given again, and I know I'm asking you to make a lot of forecasts here, what would you say is the likelihood of this happening?
I don't know, but I think it would be brilliant if he's serious. We know Trump personally loves gold. He's made that very clear over the years. He likes gold, okay? Whether he can get the entire system behind him on such a move, we'll have to see. But I think, I didn't know that about Don Jr.'s statement. That's very interesting that he would say that. I think, again, to me, that's the only solution left. There's no other solution to the problem but then, and I think maybe the US in partnership with Europe might be enough to really set the stage for a gold-backed currency or using gold in some fashion to get rid of the debt. But it will have to be repriced. There's absolutely no doubt about that. So if you're an investor in gold, if you hold gold, which I highly recommend, I think it should represent between 10 and 20% of your portfolio, hang on to it. Don't sell it. I haven't bought mine 25 years ago. I bought it again in 2018, and I was buying recently just in the last number of months. Just keep holding on to that gold. It will be very, very useful, and it will get revalued in some fashion through some event, which I cannot predict.
Hopefully not a negative event, but if you could sit down with President Trump, Frank, and give him one warning about the next 5 years or give him some piece of advice, what would it be?
I would say pay attention to the fact that you're about to fall off a fiscal cliff and there's no coming back when you fall off. You can't, he's wanting to take rates down to 1%. That's not going to do anything for the long rates. And the only way to manage the long rates lower is through QE. And if you start QE again, which I absolutely predict will happen, we're going to see inflation like we've never seen before. And then what scares me the most is that if we get a very severe recession, we haven't had a recession in so many years now. If we get a severe recession with the amount of global debt that's out there at historic levels, what is it, $315 trillion worth of debt, you're going to see a spiral that's going to be impossible to turn around. And you're going to see depression / hyperinflation, and that always, always, always leads to war. And so my recommendation to President Trump would be get ahead of it. Get ahead of it, because you can't, once that train gets past a certain point, there's no turning back. You cannot turn this thing around. So you have to really come up with a creative solution, and I think the solution is gold. And some fiscal discipline and getting rid of the Fed. They've been the worst players in this whole thing. They've made the situation worse the last 25 years.
So you would tell President Trump to do what exactly?
I would say take the gold you have, buy a lot more, use your very overpriced currency to buy a lot more gold, much in the same way as China's doing, and then come to an agreement with enough countries, whether it's with China or not, maybe it's just Europe, revalue that gold to where it should be, and then use it as a backing for the currency. That's what I would say.
And we've had a lot of people on this show saying that they think this is what's likely going to happen, and that there has been this covert program to buy gold secretly, because obviously you don't want to announce something like that would see the price of gold skyrocket. And that, Treasury Secretary Scott Bessent, who is a self-proclaimed gold bug, if you will, could be instructed by the president to buy the gold under the Gold Exchange Act, and can only, you only have to tell Congress about this once it's done. So this could in fact be happening. Frank, what is the single most important variable that you're watching right now? What is the one indicator that will tell us that we've crossed the point of no return?
We're almost there now. I'm not even sure that we can turn this around. And I'm just being very honest, just looking at the situation. I think it's not without a lot of pain. Okay. So I'm just keeping an eye on those deficits. And I'm going to see if Trump is true to his word that he's going to try and jam the short-term rates down to 1%, which is, I think, going to be counterproductive. I think it's going to really hammer the dollar in a way that you will never be able to turn it around, because it will be followed by QE, because that's the only way. You can take short-term rates down to 1%, but again, to take the long rates, which are what's fundamentally behind mortgages, and almost every loan in the world is based on U.S. 10-year treasuries, you have only one tool. It's called QE, printing money. And we already entered what I believe was an inescapable trap back in 2009, and then again during the COVID years. This situation, if it happens one more time, it is the end. It is the end. It's the end of the dollar. It's hyperinflation. It's nasty, nasty stuff that you just don't want to wish for. So
if what happens one more time, if there's more quantitative easing,
QE, yeah.
There's
and again, I think it's going to happen. I really do. I just don't. Already, you're seeing sort of this shadow QE happening, with the repos and everything. The bond system, government bond system, is broken. It's broken, and again, this needs real. Serious approach. Can't tinker with this stuff. And again, the problem is that it's going to be painful any way you do it. It's going to be painful. So, and politicians are politicians. They don't get elected on administering pain. So I don't know. I'm sorry. I sound like a pessimist. I just don't see the way out.
I just want to clarify, though. You're saying one more round of QE could be the tipping point?
Yeah, absolutely. Because I think the next round of QE will make 2009 look, like garden party.
And to be clear, we did have Fed Chair Jerome Powell saying that they're going to stop QT, quantitative tightening,
yes.
Which
That's
effectively step one, which effectively takes, quantitative tightening is supposed to take liquidity out of the market, so they're going to stop there. Quantitative easing is buying back your own bonds, effectively. Right? Creating more.
Yes.
Yeah. Printing money. Yeah. Is there an amount that would be acceptable, or
I don't know, but it'll be large. It'll be large because the world is losing confidence. This is different than 2009. We're in a different world now. Much of the world's lost confidence in the U.S. dollar. It's afraid of the U.S. administration and their tactics. We're at the tipping point, and I think the next round of QE is going to cause the world to panic.
What would that panic look like?
Complete dumping of U.S. dollars.
Complete?
Yeah. If you believe a currency is going to be destroyed by the printing of money, just go. Look at Venezuela. Look at Argentina in the past. Look at the Weimar Republic in Germany. If you see that coming through the printing of money, are you going to hold on to that currency? I lived in Argentina as a little boy, and my father got us out of there just in time, but he couldn't get his money out in time. By the time he settled all of his selling his businesses and things and got his money, hyperinflation had set in. It was worthless. And I mean, when I say worthless, it was like wallpaper. It didn't have any value whatsoever. If you see that coming because they start printing money again, I think there's going to be a panic. And I think it'll be creating a dollar crisis.
Well, I mean, hyperinflation, like you saw in Venezuela, in Zimbabwe. I grew up in South Africa, so I'm quite familiar as well with seeing how currency is not even, used as toilet paper, as they say, the analogy there. But this is the United States of America. You
So
know,
what?
even with
You know,
one more round of quantitative easing, you're not going to have people, you
I,
know,
Michelle, I've been listening to this American exceptionalism argument for so many years now. I'm sorry, I'm not buying it. No country is that exceptional, and the U.S. has certainly passed the point of proving that they're exceptional. I mean, it's a disaster. It's a disaster. Their debt load's a disaster. Their deficits are a disaster. Congress doesn't work. It's you know, I don't believe that any country is exceptional enough to withstand that kind of money printing. And I'm sorry, it's happened before. Great powers throughout history have been destroyed by their currency, by devaluing their currency, debasing their currencies. It's happened for 500 years with paper currencies. What do you think? The U.S. is different. It's doing this. It's making the same exact mistakes that were made by all those other great powers, and they all ended badly. All those currencies went to zero.
look, to substantiate your point, we have Ray Dalio, who has been speaking about this, who's written about the life cycles of empires as they rise and fall. This is certainly a pattern that we've seen throughout history. Reserve currencies or currencies being debased, the empires rise and fall. He recently posted on X, history shows us that having too much debt during an economic downturn leads to a classic self-reinforcing cycle where the empire can no longer borrow the money to repay its debt. It prints a lot of new money, which devalues the currency and raises inflation. Living standards decline, leading to the rise of political extremism. Turbulent economic conditions undermine productivity, and there is conflict about how to divide the shrinking resources. Populist leaders emerge, pledging to take control and bring about order. We can say
The
we're
answer
already
is yes.
seeing some, yeah. But so, I mean, I'm not debating that this is the pattern that this happens. I'm harping on this point because you're saying one more round of quantitative easing and people dump dollars and bring us back to a Venezuela-like dynamic. What?
I believe that. That's my personal opinion.
Wow. That's a very dramatic
Yeah.
opinion. What, Frank,
Well,
what
I'm
are they
sorry.
buying?
What's that?
What are they buying? They're dumping dollars and doing what?
Gold, other tangible assets. Look at what Tether's doing. Tether, which I think sees the end of their game coming, is taking their 10 billion profits a year. What are they buying? They're buying gold, farmland, and Bitcoin, and they're buying
Yeah.
it by the truckloads. They see what's happening, and I honestly believe that we're heading in that direction. I'm sorry, it's just you can't print money forever and not have that outcome. We've proven it throughout history. I hate to repeat myself, but that's just a
Well,
fact.
and look, we have you on to warn our viewers to share your opinion, an opinion that has proven to be accurate on many, many fronts so far. Tether, for reference of our viewers, is the world's largest issuer of stable coins, which sort of links us back to that idea where you said that could be a lifeline for the US. So could that delay the process? Could you have, okay, maybe quantitative
I don't
easing?
think Tether's going to play a role. I don't think Tether's going to play a role because they're not regulated in the U.S. They're domiciled in El Salvador. They're outside the
Well,
jurisdiction.
there is
Can't even
Tether
audit them.
US.
Yeah, but that's a separate entity. The real Tether still with all of that, all of those treasuries sits outside the U.S. And I think that game is coming to an end, especially if Trump drives rates down to 1%. They make their money by collecting the 4% yield that they're getting on treasuries, which is 3.5%, whatever it is today. If Trump gets his way and gets a new Fed chair, gets rates down to 1%, that game is over. So that's why I believe they're moving into gold and farmland and Bitcoin.
And we do know that they've done that. They're also investing in the gold ecosystem, looking at miners and looking at junior explorers.
Yes.
And having conversations there. But just to bring it back to your point earlier, you said that stable coins could in fact be the new petrodollar and create demand for dollars.
Yeah, it could.
So how do we reconcile those two ideas?
Well, because Michelle, I don't know how successful they're going to be in implementing that plan and how much of the problem that it solves. Okay, it's got to be global for it to have any meaningful effect on Treasury demand. So I don't know. I honestly, I just don't. Again, I always look at human nature, and the world's run by people, and and people are driven by motivations that are not always logical, and I just see the way that governments behave, and I just and when the system is so corrupt, the American system is now so corrupt and broken, it just doesn't work anymore. You can't get anything done. And so I don't know how to, anyway, I'm sorry I'm so pessimistic, Michelle, but that's just what I believe.
We want you for your honest opinions. And, we're not here to paint a rose-tinted picture of the world if that's not indeed how you're seeing it. What would this mean for regular Americans? We have, say, another round of quantitative easing. The Fed comes out, says it's creating more money, printing more money. What does that look like for average Americans?
Well, I'm glad you coined it as average Americans, because I think obviously the wealthy people can diversify into tangible assets, and that's the only way to retain your wealth in a hyperinflationary environment is through tangible things, commodities, gold, farmland, and anything that you can touch and feel and has value or scarcity. But the average American's living paycheck to paycheck. They have no savings. I don't have a solution for them. I really don't. I think this is what causes, societies, the fabric of societies to tear apart. And we're seeing that already. I mean, really, you have two economies in the U.S. You have the economies for the very rich, the elites, which is a very small part of the population. They're doing really well. But the rest of the country is not. There are no savings, really, with the majority of Americans.
Yeah. And as we've been covering, we're seeing socialism take hold in the United States. When New York City elects a socialist mayor, the capital of capitalism, that's a
Michelle,
sign.
it's not whether it's someone gets elected on the far right or the far left. What happens is they're getting rid of the incumbents. People are so angry, so dissatisfied with whoever the incumbent is that they get thrown out every time, and they go to the extremes. So, in New York, they went to the extreme left, but it could just as easily go to the extreme right if he doesn't perform the next election, they'll go the other way. They just want to get rid of the incumbents. People are upset, and they don't understand why they are so far behind. Most of the American public is not sophisticated enough to really understand the reasons why we got here, and that's why it's easy for populists to point at enemies, to say, well, it's China's fault, or it's Mexican immigrants, or whatever. That was not what brought us here. We did it to ourselves, and I could spend another hour with you telling you how that happened. But again, it's throw out the incumbent. That's what the game is.
Yeah, well, as you say, it's a K-shaped economy. The split between the haves and the have-nots is growing ever wider. I'm still not over this one more round of QE, and it's the beginning of the end. So Frank, as an investor, what are you doing to prepare for this?
Sorry, buy gold. It's the only answer I've got. Now, some people believe it's Bitcoin they should buy. Personally, I don't, but they're entitled to their opinions, and if they believe that Bitcoin is the equivalent of gold, God bless them. And but whatever you do, protect yourself. And you got to have ownership of tangible things. Paper is going to go to zero at some point.
A lot of the stock market valuations are being attributed to this idea that it's also an anti-inflation hedge, right? Forget the AI argument that it's like nobody wants to sit in cash or treasuries. Do you see the stock market as a potential way of protecting against this?
I do. I think, obviously, and there are different kinds of stocks. So I'm not saying the broad stock market. I'm saying, yes, and I invest in, I have not touched an American stock in a while because I think the whole market's overvalued at the moment. But there's certainly some incredible companies overseas that, pay dividends and have real global operations and things that I like. Yes, stocks work as well, but they have to be the right kind of stocks.
All right, Frank. So your highest point of conviction, if you were to summarize it for us?
Gold's going higher.
Gold is going higher.
It has to.
And you've often said that you do not want to live in a world with 20,000 gold, with 30,000 gold. That is not.
I don't. But unfortunately, if my choices are, it's like if you own a house, you're obviously not praying for it to burn down and lose all your belongings, but you're sure glad you have insurance if it does happen. And that's all I'm saying about gold. I'm not saying buy gold for greed and buy gold to protect yourself. That's it. And I'm not saying put everything into gold, like some people say about Bitcoin. I'm saying, put enough into gold that's your hedge against all human stupidity, and which we're seeing in truckloads at the moment. So, yeah, that's the only real conviction I have. That's why I don't sell my gold. I just say, it's there as insurance.
So, we started off this conversation talking about this monetary reset. And the triggers that could lead to that. Would QE sort of be one of the dominoes that would trigger this? If you're saying QE would lead to massive hyperinflation, would that
after a complete wipeout? Yeah, absolutely, because that's how all other monetary systems were reset in the past, through some kind of a wipeout, war, hyperinflation. You start from scratch in essence. You start with a new system, and you wipe out all of the old debts.
Could you blunt QE if you come out with some gold-backed treasury at the same time?
I don't think we have enough gold at the right price for it to back QE at the moment. I really don't. Like I say, you need either a lot more gold or a much higher price.
Okay, so hence your highest point of conviction is you have to own gold. Frank, a sobering conversation, indeed. I really, one more round of QE and everything falls apart to me is a very devastating line, but this is what we have you on for your opinions, which, as I say, unfortunately have been very accurate in the past. So we're going to leave on that sobering note, but Frank, we'll love to have you back on soon, and hopefully we delay this QE until there is some solution, as far as I'm concerned. As much as
I pray that we will,
because the social unrest and the chaos that would come along with that is not going to be any compensation for a higher gold price, no matter how much gold you own. No. All right, Frank, where can people learn more about you if they want to learn more about your work?
I tweet a lot, or X, sorry. I'm on X, and I have a lot of commentary on X. I'm writing a book at the moment, which will be out next year. I've started a second book, which is going to be about gold and my gold journey, and what it means, and where, to explain basically all of the things we talked about on today's show. So I'm starting that book already, but my first book will be out next year. But follow me on Twitter.
Twitter, X, whatever we call it these days. All right, Frank, thank you so much. Appreciate you joining us. Thank you.
My pleasure.
And a big thank you to all of our viewers for watching. Remember, if you haven't subscribed yet, please do so, and feel free to comment. I read the comments, hence I'm breaking down the concepts, trying to simplify things for everyone. So as I like to say, feel free to praise, whine, or just opine. We do value your feedback. For me, Michelle Makori, and the rest of the team, we'll see you next time. Until then, stay sovereign.
This is The Real Story with Michelle Makori.